You guys know I'm a dividend growth investor. I prefer stocks that have a low starting yield but grow their dividends at a much faster rate than stocks that have a higher starting yield but are slowly raising them over time. However, sometimes it's nice to have stocks in your portfolio that you know are going to put some cash in your pocket every quarter. As you can see here, real estate, utilities, and telecommunications all pay a significantly higher than average Russell 1000 yield of 2.3%. We're going to go over three stocks. They all yield over 5% in dividends, which is double the normal average yield. Since a dividend is putting money out of a corporation's pockets and putting it into the shareholders, now the company won't have as much funds to reinvest back into the company for growth. So don't expect these companies to capitally appreciate overnight and enjoy those dividend payments. Anything larger than about a 6% yield, I would be very skeptical about. Chances are this is a company that has such a high yield because the stock price has dropped so much in recent years, and a dividend cut or stoppage of all dividends is just on the horizon. With that being said, the first stock we're going to take a look at is Medical Properties Trust, ticker symbol MPW. This is a real estate investment trust which engages in investing and owning net leased healthcare facilities across the United States of America and select foreign countries. It focuses on funding hospitals and other facilities where patients must be admitted by doctors. Two industries that can never go away are healthcare and real estate. They are fused together into one here. Boasting a 5.42% dividend yield and a 43% rise in stock price since 2014, MPW now has your attention. Demand for healthcare facilities is going to rise considerably with an aging population that is living longer than ever thanks to modern medicine advances. The amount of people aged 65 and older is projected to double what it is right now by 2050. MPW's portfolio is loaded with net lease properties, which basically means the tenant is responsible for expenses such as property taxes, insurance, and maintenance, which is all locked into long-term contracts, and all Medical Properties Trust does is collect those predictable rent payments year after year. Second up is a stock I never see getting any love, and that is Royal Dutch Shell, better known as just Shell, ticker symbol RDSA or B, but more on that later. Now, you've seen enough Shell gas stations on every corner to know that this is an oil and gas company that explores for, produces, and refines oil around the world. Oil is known as the black gold because it makes everyone involved in the oil industry basically rich. Oil is important on a global scale because many of the products we use and make have an oil-based component. This is a massive company, by the way, at $261 billion in market cap, and is one of the largest by revenue in Europe and the world. While many of Shell's competitors have overpaid to buy new drilling locations, Shell is planning on investing $4 billion every year into existing locations to double its shale production by 2025. Shell trades at an 11 PE ratio, which is considerably lower than the industry average of 17. Its ridiculous 5.78% dividend yield is also higher than the industry average of 4.38%. One knock on Shell is that it has not raised its dividend of 94 cents since May of 2014. Instead, it just continues to reward its shareholders every quarter with its very consistent dividend and only has a payout ratio of about 60%. Shell beat its earnings in Q1 of 19, and its results easily outpaced its biggest rivals, including ExxonMobil, BP, British Petroleum, and Chevron, who all saw sharp drops in profits in Q1. Also, if you're confused on Shell A shares and B shares, know there is hardly any difference other than A shares are subject to Dutch taxes of 15% and B shares are under UK tax laws where there is no dividend tax withholding. The new government in the Netherlands wanted to abolish this tax, but those plans seem to have fell through. Before we go over the last stock, make sure to hit that subscribe button and thumbs up, as it really helps a small YouTuber like me out. Utility companies are known for their boring business models and high dividend yields. So, what did I pick for our last stock to watch? A boring utility stock, of course. Duke Energy, headquartered in Charlotte, North Carolina, is a company that specializes in gas, electric, and commercial renewable energy. Duke is one of the largest electricity providers in the US, providing power to nearly 8 million US residents and natural gas to almost 2 million people. Duke is a registered utilities company, meaning that they need approval from the Federal Utility Regulations Agency to be making changes to its rates or capital investments. This means it's not hard to predict a stable income from Duke as revenue and cash flows are pretty stable. The income from households paying their electric bills every month cover normal operating expenses, as well as a little bit of income for Duke to take home. Since Duke needs to publicly disclose its future plans for expansions, we know that they plan on spending $37 billion over the next 4 years on modernizing its electric grid, such as using electric vehicles and battery storage, expanding natural gas infrastructure, and focusing more on renewable energy segments. These improvements might change Duke's earnings per share to compound 4 to 6% through 2023. The reason we're even talking about Duke in the first place is for its massive dividend of 4.26%, which I realize is under 5%, but the average of the three stocks in today's video is over 5%. So no need to write me an angry novel in the comments. Duke has paid dividends for 92 straight years, and it's also increased them for each of the past 13. Again, none of these stocks will make you rich overnight, but they will help investors become rich over a long period of time with their steady yet consistent dividend payments. They all belong to sectors that will always be a hot commodity in real estate, medicine, oil, and utilities. Unless, of course, the future has us sitting in darkness. In that case, still remember to hit the subscribe button and let me know in the comments what you think of these stocks or if you have another high yielder in your portfolio.